This is exactly how I plan to get to £1 million invested. Why £1 million? Because it sounds cool. But no, there is a practical reason. I'm also not gonna do anything with this. I don't even know why I'm holding it still. There is a practical reason to why I want to get to £1 million invested. So I can call myself a millionaire and be richer than you. Boom. No. The real reason is because with £1 million invested, I would be able to draw down £40,000 in yearly annual income from that pot and live off of that money forever. And I'm not BSing you. We are gonna come back to exactly how you can do that and work that out for yourself. But first, let me give you a quick bit of context, and I'm finally gonna put this orange down. The most important factor is I currently have £150,000 invested, which helps massively because I'm not starting from £0. So I actually inherited that money from, here come the dislikes. I'm joking. I didn't inherit a single penny. I'm certainly not a genius, and I didn't do anything special. I've simply built up this pot over the last 8 years, mainly through my 9 to 5. I started back in 2017. And then over the years, particularly when I qualified as a chartered accountant in 2021, I got a big salary increase, and really I've just invested as much as possible for the last 7 or 8 years. But with that big salary increase, and by not getting sucked into lifestyle inflation and prioritizing investing, and with some good gains from the market, I've managed to build a 6-figure pot, which is absolutely mental. But now that I've got that £150,000 pot, it is a great basis to help propel me to this larger pot that I hope to one day get to and then live off of. Of this £150,000, about 2/3 of the money is accessible, meaning it's in stocks and shares ISAs and general investment accounts, and the other third is inaccessible, meaning it's locked up in pensions, so I can't access it until much older, in about 30 years time. Let me give you though the full details. This is where the trusty MS investment portfolio tracker comes out, and it really does come into its own at times like this. In my stocks and shares ISA, I've got £50,000, and that's with Vanguard, and it's all in a global index fund. Across my pensions, I've then also got around £50,000, or £48,957 if you want to be specific. This is split across my UK workplace pension with a Legal & General, my UK SIP with Vanguard, my stocks and shares lifetime ISA, which I no longer use and haven't for many years, with Hargreaves Lansdown, and my Australian superannuation, which is my dingo dollar workplace pension. So you can see, currently the situation is a bit complicated. I've got a lot of fingers in a lot of pies.
That's what she said.
One day I will simplify all of this when I'm back home in the UK, but just stick with me for now. The other £50,000 is then in general investment accounts. About 40% of this is in crypto, and then the other 60% is in the stock market, mainly in my Vanguard Australia general investment account, which I've been contributing to on the side using my Aussie dingo dollar paycheck. Unfortunately, there is no stocks and shares ISA equivalent in Australia, which is why I'm using their general investment account. So it is worth saying that with this 50K roughly in general investment accounts, it is going to be taxable, so I'm going to lose a bit of it when I do eventually come to sell and however I plan to live off of the money. Speaking on living off the money, I'm actually going to make a separate video on exactly how I plan to live off of all of these investment pots. So subscribe so you don't miss that one. It'll be out in a couple of weeks. And if you're looking to start investing, I'll link my 100% free guide in the description. You can read through it in an hour or so, and it'll tell you pretty much everything you need to know to start building your wealth. So that is the context and the specifics. So you're probably thinking, I've got 150, I need to get to a milli, I've got an £850,000 gap to plug. That's a lot of money, and it may sound a bit overwhelming, but fortunately, it's not gonna come from my pocket, it's gonna come from yours. I've started a GoFundMe page, the link is No, a lot of it, as I'm gonna show you, is gonna come from compound interest and the magic of compounding. So to break down how I sort of how I plan to plug this gap, it's gonna come from two things. Number one, compound interest, and number two, my own contributions. So it's worth saying, to build this £150,000 pot, I've contributed around £90,000 of my own money. I've then had some employer contributions from a workplace pension, some government contributions in my stocks and shares lifetime ISA, some capital gains from the market, and that's been all mashed together to get to this £150,000 mark. But of these contributions that I've made myself out of my own pocket through my 9 to 5 mainly, a lot of that really has been weighted towards the last 3 or 4 years when I qualified as a chartered accountant and got a big salary increase, and I really started to invest more. So looking back over the last 2 years, on average, I've been very fortunate to invest about £1,500 per month. And that is across everything. When I talk about my investment portfolio, I'm talking about everything: pensions, ISAs, general investment accounts, everything. Of that money that I'm putting in every single month, some of it's in my workplace pension, and some of it recently has been in my Australia general investment account with Vanguard. And when I was in the UK, it's worth saying, my approach was pretty similar. I had my workplace pension and then my UK Vanguard stocks and shares ISA. So my sort of two-pronged approach with a little bit of crypto on the side has been really what I've been doing for 5 or 6 years now. However, even though I've averaged that over the last couple of years, I'm gonna be a bit more conservative, because with investing, your contributions aren't necessarily linear. Who knows what my average contributions are gonna be for the next 20 years. So I'm gonna say, on average, I'll invest £1,000 per month going forward, which is slightly lower than my average over the last few years, but it's probably my lifetime average when it comes to investing. Actually, I can probably work that out. If I've been investing for, say, 8 years now, that is 96 months. And I've got roughly, of my own money, about £90,000 invested, which actually means I've been investing on average about £937 per month across my investing career, although most of that, as I've said, was weighted towards the last few years on my highest salary. Now, the thing I like to do more than anything, it isn't seeing Arsenal win, it isn't donating to charity, it is doing compound interest calculations. What more would you want to do late at night when you're on your own? No comment, Your Honour. If we assume I've got £150,000, which I do, I don't know why I said assume, I've just made all this up, by the way. I've got £150,000 and I'm gonna say I invest £1,000 per month for the next 10 years at 7% per year. 7% is the average long-term return of the stock market after inflation. That gets me to just under £500,000, and is after 19 years, so I'd be 46 years old, where I finally get to that fabled £1 million investment portfolio. Now, I'm gonna make a separate video, as I mentioned, on how I plan to live off of this money, because of course, if this is the case, at 46, I can access my stocks and shares ISA because it's accessible, but I can't access my pensions. So the actual accessibility is a different point for a different video. But this does mean, based on the calculation, when I get to 46 years old, I will finally cross that £1 million mark, and I can then draw down 4% of that per year, £40,000, to hopefully cover all of my expenses and live a comfortable life. The thing with this, a lot of it is forecasting, and in the future, who knows what's gonna happen, but I think it is interesting to play around with it. It's worth you doing for your own situation, just seeing how much you might need to retire on, how long it will take to get there. It's certainly better than just digging your head in the sand and just being immune to it all. Going back to these calculations though, the beautiful thing is, and really because I've got that strong foundation of already a large pot, I've contributed in the first 10 years an extra £120,000, but most of the money has come from interest earned, from compound interest of £196,000. Over the 19 years to then become that millionaire status, I've contributed £228,000. However, once again, the interest is even bigger now, and that really is the power of compound interest and time. The compound interest earned over that period is £627,000, which is absolutely massive. And it really shows the importance of just investing and thinking long-term, because compound interest really will do the heavy lifting. And boom, end of the video. See you in the next one. No, not quite yet. I did promise you that we'd look into the 4% rule, and this is how you can one day live off of your investments. How this works is, if you take your annual expenses that you might have in retirement, or when you want to retire, with retirement being a number rather than an age, you can say, okay, you want to live off of £30,000 per year. If you take that £30,000 and you times it by 25, you get to £750,000. What this then means is you can live off of that pot forever. Because if you draw down 4%, that will give you £30,000 of income per year. And the idea is, because the stock market generally averages 10% per year, or 7% after inflation, you can live off of some of the money whilst your actual principal continues to grow. Of course, in reality, the stock market doesn't go up 7% per year. It's very much volatile. So you might need to adjust your lifestyle, or work for an extra few years, or for less years, depending on what the returns from the market actually are. But I still do think the 4% rule is worth just working out to have a rough estimate of, based on your expenses, how much you need to build your pot to. So I think often in today's society, I don't want to get philosophical, people just keep accumulating, and then all of a sudden, they don't actually enjoy the fruits of their labor. So if you actually can have a rough number in mind, you might be able to pull back from work, take on a more enjoyable job, and actually live off of and tap into your investment portfolio to fund a part of your lifestyle. But that really is how I then plan to build up my pot over the next 19 years to become that millionaire, and how I then plan to one day live off of the money. It's using that 4% rule. As I mentioned, in reality, there might be some years where I draw down more or draw down less, depending on my lifestyle expenses, if any future kids or grandkids need money, or if the market's had a great year. You can obviously adjust things in reality, but from a sort of theoretical point of view, this is how I literally do plan to build my portfolio up and then one day live off of it. If I keep working my 9 to 5 and get promoted, I might be able to invest more, get to this point quicker. Although alternatively, if I take a career break, do a sabbatical, start having massive expenses, if I have a mortgage and a child, then my expenses might go up massively, so I'm investing less. So that's why I've tried to keep these assumptions a bit more conservative, but I still think it is worth doing because you can then see what might actually be realistic one day in the future. And as I said, it's better to sort of take a bit of control over this and at least forecast it rather than leaving it up to luck. That wraps up this video. I hope it was helpful. I'd be interested to know what you thought of my thought process. If you think it was missing anything, or maybe you've got a different idea of how you plan to build your portfolio, let me know in the comments below. Always interested to chat about investing and wealth building. But yeah, thank you for watching. I'll link another video here if you want to stay on this investing train, and I'll see you in the next one. Thanks for watching.